I'm Gloria S, Crump, the Queen of Real Estate, and thank you for joining this week's Tea and Crumpets. Today I have a guest, Polly Grimm with SWBC Mortgage, and she's been with us many times, so thank you for joining us again today.
Thank you.
Yes, and you've been doing mortgages for quite some time.
Yes, I've been in the mortgage industry and the financial industry for over 20 years.
Oh wow, so she's an expert, and today we're going to talk about down payment assistant loans. So,
yes.
Yeah, and this is great for people that don't have a lot of cash available, and sometimes you have cash that you don't want to get rid of, especially in this type of economy. So I'm excited to hear about the new programs that y'all have to offer.
Right.
Yeah, and so the first one is the Alabama First Step by the First Step by Alabama Housing Finance Authority. Is that correct?
That's correct.
All right. Well, tell us a little bit about it.
So the First Step program is a program they used to have years ago that they just brought back this spring. And it's for either first-time home buyers or people that haven't owned a home within the last 3 years, unless you're a veteran. So the way that it works is it's a combination loan. It has a first and a second mortgage. The first mortgage can either be FHA or conventional, and then the second mortgage is, so they're amortized over 30 years, fixed rate. And the second is either 4% or $10,000, whichever's the lesser of the two, in a fixed rate for 10 years, amortized over 10 years.
Okay, and so with that program, you were saying that it's either first-time home buyer, someone who hasn't owned in 3 years, or a veteran.
Right.
And obviously the interest rate for the FHA is lower than the conventional part of it, which is great because sometimes houses, if you're not familiar, FHA is a lot more strict on the condition of the property sometimes. So that's great that there's an option that they can do conventional.
They do have some requirements for FHA that they don't have with conventional, so it is good to have options.
Yes, and then there's also the Step Up, which is different.
Correct. So they've had the Step Up for a good while, and the Step Up program works similar to the First Step, and it has a first and second mortgage, but it has a higher income limit, and it's not for first time, it's for anybody.
Okay. And so the credit score, what are the credit score requirements for those two?
It's 640 for those two programs, and then there is a debt to income ratio requirement as well.
Okay. And so if somebody's credit score is, I think, did you say it was 640?
640.
All right. And so FHA, let's just say your credit score is less than 640. There's obviously FHA that they can go.
Right. We can go as low as 580 on FHA loans.
And then that is with a minimum of 3.5%
down payment. Right.
So, but the only difference is they don't have the second mortgage, so you would have to bring that down payment.
Right. Exactly.
And then there's also we can talk about how there's gift funds. If somebody might need to borrow money from a family relative or a friend. I've had a couple of people ask me about the gift funds. Do you mind explaining a little bit?
Okay, the way the gift funds work is it can't be borrowed. It actually has to be a gift from a relative or your employer or a family friend. So they can, depending on the loan program, it depends on how much, as far as like seller concessions as well, which we probably were about to get into. It depends on how much they're allowed to give towards that.
So, so it does depend. Could they, depending on the situation, could they get the entire down payment gifted to them, or?
Right. Yes.
Okay. Oh, okay. Well, that's good to know. And then also, you just mentioned the seller concessions.
Right.
So, are people able in the First Step and Step Up, are they able to also have seller concessions?
Yes. FHA, you can do up to 6%. On conventional, you can do up to 3%.
And that's also in the First Step and Step Up
programs.
Right,
exactly.
Oh, okay, great. So that's awesome. And then there's also USDA.
Right, there is USDA. So USDA is 100% financing, just one mortgage. But not only does the borrower have to be eligible, the property has to be eligible. So it has to be in a more rural area. But there are even some parts of Orange Beach and Gulf Shores that are eligible, as well as the outer, like Foley, Loxley, Summerdale, Robertsdale, Bay Minette. Typically Fairhope, Daphne, and Spanish Fort on the eastern shore are not, but they do have some pockets that are eligible.
Oh, that's wonderful. And that's, is their interest rate, do you see typically higher or lower than the FHA route?
It's a little bit higher than the FHA, but lower than the conventional.
Yeah, and that's because it's 100% loan too.
Right.
And they also have income limits as well.
Right, they do have income limits on USDA. The income limit is $112,450, and they do have a sales price or loan limit that is $398,600 on USDA.
Now, do they have loan limits for the first step and step up?
Yes, they do. So on FHA, it's going to be the FHA limit, which right now is $498,257.
Oh wow! So that's really good.
Yes.
I mean, you can definitely find a place, you know, a very nice home down,
right.
down here for
Exactly.
that. Yeah. And so, let's see, what other differences or with the step up and the first step that you see that, you know, people would like to know about? Is the step up also got the conventional and FHA route?
Yes, it does. It has both options.
Oh, okay. Well, that's awesome. And let's see. And so there's the credit score is a little higher for these than if you were to go FHA.
Correct.
But as well as for conventional, because conventional you said was 620 minimum credit score.
But for this program, it's 640.
Okay.
Regardless of whether you go FHA or conventional.
Okay. And let's see. And is there any other, you know, topics about that you think is really interesting for people to know?
I just think it's something that a lot of people didn't know about, and it's a great program. We can close it in 30 days, just like a conventional loan. And most people kind of shy away from bond programs, but this is a really great program.
Well, and two, right now, I don't know if people have noticed, but because interest rates have gone up, usually we see rental rates go up. So a lot of people are paying exorbitant prices in rentals.
Right.
And they might not have the money for a down payment to purchase a home. And this is what's wonderful for them to know about, that there's actual loan programs that can help with that down payment assistance. And that way you're not just giving money to the landlord or another owner. You can buy and build equity, because our county is one of the fastest growing counties. And so that way you're able to get in. And what's nice is, like you were saying, the step up and the first step programs, their interest rates are less than what if they were to go with typically than straight to conventional or straight through FHA, if you can qualify with that credit score, and debt to income ratio.
So right now for the first step program, the FHA rate is 5.75, whereas a traditional FHA rate is around 6.875. So this is great. And also, you don't have to use the down payment assistance. You can actually come with the down payment.
Oh wow! So they don't have to worry about, if they have the down payment, they don't have to do the second mortgage.
Correct.
Is the second mortgage interest rate the same?
It is. It's the same as the first.
Okay. And that's a huge difference in the interest rates for...
It's a big difference.
Oh, yes. And so, and then with it still being such a lower interest rate, are the sellers able to still do buy-down rates, or do you see that happen?
No, they can't do a buy-down rate for this program.
Okay, that's good to know. And let's see, I've got all kinds of questions because this is a really good program. So I'm really excited about that. And because I do have a lot of people that reach out that are renting and they're paying $2,500 to $2,700 in this area. And that's a huge chunk of money to not have your own property and to build equity in, you know, your home. So I think this is awesome, and I'm looking forward to getting some clients over to you so we can make some deals happen. So, well, good deal. Well, we're going to have her contact information at the end and some more information regarding these programs, and then that way you can reach out to Polly and see what she can do for you.
Right.
So
Thank you.
Thank you for joining us again today.
Thank you
we
very
always
much.
love having you here. So
Great to be here.
thank you, and we hope you learned something.